Do you have $300,000 in your bank account to purchase your first home? Like me, probably not. In this episode, we're going to break down the essentials of mortgages so that you can feel confident and informed as you start your home buying journey. Welcome to Brick by Brick, Building Homeownership. Okay, so you just graduated college. Now what? One's direction at this point could lead them to home ownership, and most don't have the ability to pay cash for a home up front. That's where a mortgage comes into play. What's a mortgage, you ask? By definition, a mortgage is an agreement between you and the lender that gives the lender the right to take the property if you don't repay the money you've borrowed plus interest. Here in the mortgage industry, we use jargon like PITI, P-I-T-I. What that means to you is what makes up your mortgage payment. That's your principal, the interest, property taxes, and homeowner's insurance. That's what you'd pay monthly for your mortgage payment, all inclusive. Others may have an HOA fee because they purchased a home with homeowners association, and others may also have mortgage insurance because they put less than 20% down, or the loan type they have to finance with automatically comes with mortgage insurance. There are hundreds of different types of mortgages. You've got fixed rate mortgages, you have adjustable rate mortgages. You have government-backed mortgages such as FHA, VA if you're a veteran. Thank you for your service, by the way, and USDA. There's also conventional mortgages. There's also non-QM mortgages for those who are maybe self-employed or have to use their assets to purchase a home. As you can see, there's a loan out there for everyone. To get started on your home buying journey, most think their first stop is with their realtor. However, that's the worst thing that you can do. Your first step should always be with your lender. So let's talk briefly about this pre-approval process. What this pre-approval process does for you, it gives you a sneak peek on what you can afford. There are 3 parts to buying a home. The first one is you, the buyer. Then there's 2 parts on the home, your appraisal and your title. Once all those 3 come together, that's when you get to close on your home. So that pre-approval process is key because it lets the seller know that you're serious about purchasing. Now, when you write an offer, it's completely based on how the home measures up. Whatever home you're looking to purchase and whatever point you are in your home buying process, this enables you the greatest level of success because you started first with your lender. Some of the documents that you'll need to provide for this pre-approval would be income documents, paycheck stubs, your employment history, your assets. What are you bringing to the table? I like to say, think pay stubs, tax returns, and bank statements. Those 3 would cover you pretty much for your pre-approval. Then one of the most important key factors is your credit score. Your credit score is like your financial report card. Your credit score will help you to get lower rates and lower costs the higher your credit score is. Don't worry, if yours is low, there are ways that you can improve it. Be sure to keep watching because we're going to show you how to do this in future episodes. So remember, lender first, realtor second. And I know that seems a little odd, especially for your realtors out there. But first-time home buyers, your realtor is going to thank me for this later because it gets you looking at homes you can afford and that are within your budget. We want this to be successful for not only you, but for the transaction in its entirety. This should be a joyful, exciting time of purchasing your first home. To set that up for success, always start lender first, realtor second. And remember, to have an attitude that this is your first home. Most people think that they own a home and live in it for 30 years. That's just not true. Most people live in their very first home for 5 years. It's a building block. It's a starting point. It sets you up for your final home or a second home, a vacation home. It's your first home. You won't have all the bells and whistles because it's a beginning home purchase. Make it one of those home purchases that fits your needs. Not wait until you've saved $100,000 for a down payment. That's just not realistic. You can do this today, even straight out of college. It's very important to make sure that you choose a lender that gives you a pre-approval based off of more than just your credit score. Your credit score does not qualify you for a mortgage. So why would we base a pre-approval just on that? You also want to make sure that you choose a lender that will slow down enough to listen to you, your story, and your needs, because everyone's situation is different. Lending is not a one-size-fits-all process. Today, we've covered what a mortgage is, the different types of mortgages, the application process for your pre-approval, and tips for first-time home buyers. But the reality is, a mortgage truly is a unique experience. And everything that we've just covered today will be decided based on what you bring to the table. Be sure to like and subscribe, because weekly we'll be bringing you beneficial and informational content that will assist you on your way to home ownership, brick by brick. Have I not commanded you? Be strong, courageous. Do not be afraid. Do not be discouraged. For the Lord your God will be with you wherever you go. Have trust and confidence that the good Lord has his best for you just ahead. Until next time, this is Suzi Beaver with Brick by Brick, Building Home Ownership. See you again soon.